Stop your SIP or continue. I am going to make your SIP decision extremely simple. Heads, stop your SIP और tails, continue your SIP. अगर इतना आसान है डिसाइड करना तो अपना हार्ड एंड मनी भी कॉइनटास से इन्वेस्ट कर दे. बट देन आई सर्च यूट्यूब एंड आई वॉज शॉक्ड. यू नो वॉट, द मोस्ट सर्च्ड आइटम्स आर SIP कैसे बंद करें, हाउ टू स्टॉप SIPs. Why are suddenly so many people asking this? Because on one side, Shankar Sharma is saying SIPs are giving free exit to FIIs and valuations are on a higher side. On the other side, Raamdeo Agrawal is saying keep investing for long term. India is a growth story. And Naren says valuations matter. And finally, Rajeev Thakkar says don't expect those old 15 or 20% wala returns. Taper your expectation. So, who is right? I am not going to give you my opinion first. I am going to take both sides and test them against the data, valuations, crashes, Rupee Cost Averaging, and one uncomfortable question. If you stop your SIP, where will that money go? Let's find out. चलो, सिक्का तो लेके आया है. Let's flip it. There you go, it's heads. India's SIP mission is massive. June 26 alone saw roughly 32,000 crore of SIP collections, and yet people in the YouTube are searching how to stop my SIP. And recently 10 lakh investors stopped their SIPs. That tells something. If your SIP has given you poor returns recently, you are absolutely allowed to question it. Even I question too. Because SIP is an automation method, no blind faith. And that brings us to mythbuster number 1. SIP हमेशा चालू रखना चाहिए, no matter what. False. Your SIP should serve your goal, not the other way around. Alright, let's give side A fair hearing. Argument is uncomfortable but simple. And equity is not a fixed deposit. You can buy a fantastic company at a terrible valuation, wait for years. So before continuing your SIP, ask, am I buying quality? Am I overpaying? And how much equity do I already own? Warren Buffett famously wrote, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. And that's the point. Good company does not automatically mean it's a good investment. And which brings us to mythbuster number 2. Great company is equal to great stock. False. Valuation decides how much return is left for you. Now, here is something investors conveniently forget. Your mutual fund has an expense ratio. If market goes up, still mutual fund house takes a cut. And if market goes down, they still take a cut. आपका SIP आपके लिए फाइनेंशियल गोल है, बट आपका फंड हाउस के लिए बिजनेस है. And again, I quote Warren Buffett, don't ask the barber whether you need a haircut. So, if someone says, never stop your SIP, हमेशा चालू रखो, don't blindly believe them. Ask why. Which brings us to mythbuster number 3. If the market gives me 0% from last 1 or 2 years, I lost nothing. Wrong. You lost time. You lost purchasing power due to inflation, and you lost the return that money could have earned somewhere else. That's called opportunity cost. So let's make this real. You have a 10,000 SIP and last 24 months you have invested around 2.4 lakh. Suppose आपका 2 साल का जो 2.4 लाख इन्वेस्टमेंट है उसका नॉमिनल रिटर्न है 0. Now compare this with a hypothetical scenario of invested in either RD or FD with a 7.5% return. That money could have been earned 2.56 lakh. That's your opportunity cost. And on top of it, inflation has quietly reduced your purchasing power. So last 1 साल से या 2 साल से zero return doesn't mean it's a zero impact. But don't make that mistake of simply adding expense ratio, FD return and inflation combining with mutual funds. They both are different things. Finance में ड्रामा चलेगा, मैथ्स में नहीं. Okay, enough of side ये. Let's flip the coin. It's tails. Now let's talk about the other side, Parma Bulls side. Because if you stop the video here, you will be thinking that I am also telling you to stop your SIP. I am not. Even side B has a very powerful argument. And this is where most anti-SIP arguments fall apart. I was planning to make a video, kaisa SIP continue karo, discipline karo and all those gyan. But to my surprise again, the most searched items are SIP kaise band kare, how to stop my SIPs. I was literally surprised because personally I have been doing SIPs and it created good wealth for me. So when I saw stop SIP, I thought I'm not so sure. Let's get into the part B argument also, because side B let's give a fair chance to hear. Before you stop your SIP, answer one question and only one question. In the first place, why did you start it? Retirement, child's education, financial independence, 10 साल, 15 साल or 20 साल. Then why should you stop your SIP for 2 bad years of market for a 20 years goal? Remember, your goal didn't change. Only the market conditions changed recently. Which brings us to mythbuster number 4. 2 bad years is equal to strategy failed, I should stop my SIP. No, not necessary. Your goal is far ahead, 15-20 years, right? Why you should stop? And honestly, कल कुछ good news आ गया. ईरान कॉन्फ्लिक्ट परमानेंटली बंद हो गया. फेड ने इंटरेस्ट रेट्स कट करना चालू कर दिया और फेड स्टार्ट्स मनी प्रिंटिंग अगेन. और हमारा गवर्नमेंट ने कुछ बड़ा टैक्स कट कर दिया. मार्केट एकदम 30,000 तक भाग सकता है. एंड 30,000 कोई बड़ा बात नहीं है, यहाँ से अराउंड 20% दूर है. एंड बिलीव मी, जो लोग आज क्रैश करके चिल्ला रहे हैं, जो वैल्यूएशंस के मास्टर क्लास दे रहे हैं, सेंटिमेंट चेंज होते ही सब गायब. एंड उल्टा दे विल गिव यू ज्ञान ऑन लॉन्ग टर्म इन्वेस्टिंग एंड रूपी कॉस्ट एवरेजिंग, because stock market runs on liquidity. So if you stop your SIP, you also have to answer when will you start again. Now let's understand NAV, net asset value, without making it boring. Imagine your mutual fund is a big shopping basket. Inside the basket you have got HDFC Bank, Reliance, Infosys, TCS and hundreds of other stocks. You don't own the entire basket, you own small units of that basket. And NAV is basically the price of the unit of that basket. For example, your SIP is 1000 and NAV is 50. Your 1000 buys 20 units, now the market falls, NAV becomes 40. Same 100 now buys 25 units. And if market falls again, NAV becomes 35. Your 1000 buys almost 29 units. Same money, more units. Your portfolio statement is screaming loss. But because of your systematic investment, it is quietly saying, "Bhai, basket sale में मिल रहा है." That's the basic idea behind Rupee Cost Averaging. But remember, cheaper doesn't automatically mean it's better. If the companies inside the basket are getting weaker, you don't want to keep buying it blindly. SIP is powerful, but blind SIP is not. Which brings us to mythbuster number 5. Falling market is bad for SIP investor. No, not necessarily. Today's pain can become tomorrow's cheaper accumulation price. 2008, different crisis, same investor question, should I stop? Nobody knew the bottom, nobody knows the next bottom. That's why stopping creates another problem. You also need to know when to restart it. Let's say stop your 20,000 SIP. Fine. Where does that 20,000 go? FD, gold or cash? Okay, but if you're keeping in cash for the crash, what's your trigger point? Nifty अगर minus 10% में, 20 में, 30 में कब reinvest करोगे? And what if you wait and the market start recovering? This is the opportunity cost nobody talks about. I agree, cash protects you from a crash, but cash can also make you miss the recovery. Peter Lynch put it beautifully. Peter Lynch has put it very beautifully. Far more money has been lost by investor who is preparing for corrections than has been lost in the correction themselves. So stopping isn't the end of the decision. Stopping is the beginning of another decision. Let me give you a cricket example. One of my favorite player, Virat Kohli, one of India's greatest batsmen. But from November 2019, he went without an international century for 1,000 days. Close to almost 3 years. Almost 3 सालों से 0 international hundreds. Imagine saying after 2 or 3 bad years, Virat is finished. Drop him. Right? Sounds ridiculous today, right? Because we understand cricket. Form changes, pitch changes, conditions change. But that player doesn't suddenly become useless. And then Kohli came back and scored his 71st international 100. So what does this have to do with the investing? One bad phase doesn't automatically kill the long-term thesis. Gold will have its time. FDs will have their time. Equity will also have its own time. Don't expect one asset class to score a century every year. If you remember, Kohli's first international century after November 2019 came in September 2022. आपका SIP के साथ भी यही हो सकता है. So, should you stop your SIP? Sometimes, yes. If your goal is changed, if you need the money, if your equity allocation is too high, or if you are blindly buying some overvalued funds or stocks, and also if your financial situation is changed. But should you stop simply because someone in the social media is predicting a crash or giving some gyan on valuations? I wouldn't. And also, should you blindly continue regardless of valuation? हमेशा SIP करते रहो no matter what is the price? Absolutely not. That's lazy advice from both sides. Stop SIP and continue SIP are both incomplete answers. So, what I'm actually saying? Asset allocation. Imagine Nifty stays at 25,000 for the next 2 years also. Sounds scary, right? Not necessary. Because your portfolio doesn't have to depend only on Nifty. Suppose you have 50% in mutual funds or equity and 50% in the fixed income like liquid funds or debt or FDs. Now equity can remain flat or to negative while your fixed income can continue generate returns. And suddenly your entire portfolio doesn't look like it's stuck. I'm going to show you this with actual numbers in a dashboard. What happens if your equity is flat for last 2 years or few more years and still your fixed income is working? If equity crashes, you have a debt bucket to rebalance it to equity. If equity rallies, your equity participates. This is not about predicting which asset will win. It's about making sure something in your portfolio is always working. It could be your fixed income, it could be your equity, or it could be gold, or it could be your real estate. This is the asset allocator dashboard I made simply through a chat GPT. So it's not a big deal. So if you need this working of dashboard and all, just type in the comment section saying that dashboard, so that I will post this in the pinned comments. So let's try out 50-50 allocation, how it works and all. मान के चलो your starting portfolio is 0 and you are starting a monthly SIP of 20,000, and I'll make equity allocation. Equity could be your shares, mutual funds, etc. And debt allocation, cash. Basically, it could be liquid funds, arbitrage funds, or FD. And I'm keeping equity returns as a bit higher to 12% and fixed income to 7% approximate. And investment horizon will take for 2 years to start the discussion. And asset allocation is 50-50%. And rebalancing frequency. What is rebalancing? For example, I've started today in the month of January, and 6 months is June. So in the July, if the equity rallies by 20%, then whatever you invested, this 50-50 ratio, this in this 20,000 SIP, 10,000 will go to equity and 10,000 will go to fixed income. The 10,000, whatever you invested per month, is 60,000 for 6 months. If equity rallies for 20%, then your equity portion will go for 20%, and the debt fixed income for half year it could be 3.5%. So it works like that. If you look at the simulator for 2 years, what happens in this equity and debt allocation? So we'll directly go to scenario analysis. For example, if equity falls 20%, worst case scenario, after 2 years of SIP, then your returns are not minus 20%, it is just minus 6.5%. And if equity falls 10%, after 2 years of SIP of 20,000, your actual portfolio return is minus 1.5%. And if equity stays flat, means zero return, which is happening from last 1.5-2 years with the Indian market, but your blended return is 3.5%. You are ahead of the equity. In the same way, if equity rallied by 10% or given a return of 10%, your return is 8.5%. Not bad. And as it is capping the downside, ऊपर का भी ना, if equity rallies by 20%, your average return is, or blended return is 13.5%, right? So what this asset allocation does is, every 6 months or 1 year, whatever the period you choose, if equity falls 10%, your 50 will become 40 or 50 will become 45, then your debt 50 will become 55. That extra 5 rupees what you earned automatically go to your equity portion. So it is by design buying low. And at the same way, your 50, for example, your equity rallies by 20%. 50 rupees out of 100 will become 60. Then the equity portion, that extra 10 profit will get booked, and again it will go to the debt portion. So it always makes that balance, so that it will by design make sure that you buy low and sell high, and you also book a profit, so that you will not miss out on any other further market miss out on any other further market volatility. That's how it works. So you are mitigating the downside risk and as well as booking the profits in the upside of the market. And it's not a rocket science, my friends. These are all, there are a lot of good funds like multi asset allocation or dynamic asset allocation to, or you have balanced advantage funds who have been doing this. The best bet is multi asset allocation fund if you are unable to manage, because if you manage it on your own, you have a taxation in the debt portion. If at the fund house level they does it, there is no taxation. Now let's try शर्मा जी, मैं 50% डेट में डाल के मेरा पूरा ब्लेंडेड रिटर्न कम करना नहीं चाहता हूँ. आई वॉन्ट टू टेक मोर एग्रेसिव बेट. लाइक मैं तो 30 साल का हूँ, मेरे को और 20 साल का मार्केट का वेट नहीं करने का है, मेरे पास बहुत वेटिंग टाइम है. सो आई विल इन्वेस्ट ओनली 20,000. देन व्हाट आई विल डू, आई विल मेक दिस 80-20. 80% in the mutual funds, equity funds, and 20% in the debt portion. So what happens is, after, and I'll change the investment horizon to 10 years. Okay. Then what happens is, in the 80-20 scenario, your average blended return will be 11%. It is very good because you are mitigating the risk on the downside, and on the upside you are booking the portfolio. And mind you, the long term return of 20-25 years is around 11 to 12% only, and with having reasonable debt portion also you are hitting that. This is very good, and personally like this 80-20 combination. And let's go to the scenario analysis. If market मान के चलो bad time है, after 10 years still your equity hits minus 20%, your actual fall is minus 14%, not 20. And if equity falls only minus 10%, your actual fall is minus 6.6%. And if equity मान के चलो on the long term it is plus 10%, your returns are 9.4%, very close. And if equity gives CAGR of 20%, then you are at 17.4%. This is the power of equity and debt. Okay. Diversification doesn't stop at equity versus debt. You can diversify geographically too. Why should your entire equity portfolio depend only on Indian market? You can have exposure to Indian equity, international equity, different economies, different currencies, different sectors, and different growth engines. So if Indian equity spend 2 years doing nothing, your international allocation may be doing something completely different. For example, लास्ट 2 सालों से US मार्केट ऑलमोस्ट 40% ग्रो हो चुके हैं. दैट इज द पॉइंट ऑफ डाइवर्सिफिकेशन, नॉट टू मैक्सिमाइज एवरी रिटर्न, टू रिड्यूस योर डिपेंडेंस ऑन एनी वन आउटकम. एंड हैविंग डिस्कस्ड ऑल दिस, दिस इज द फ्रेमवर्क आई प्रिफर. हेड्स, market goes up, my core equity participates. Tails, if market crashes, I have enough liquidity to buy, and my future income gives me fresh capital. If Nifty stays flat, other growth engines in my portfolio can compensate. That's the beauty of asset allocation and diversification. So I don't need to predict the market, I just need to avoid being destroyed by it. That's the difference between prediction and preparation. If you understand properly what Shankar Sharma is saying, वो ये नहीं बोल रहे इक्विटी हमेशा के लिए इन्वेस्टमेंट बंद करो, नाउ द वैल्यूएशंस आर टू हाई. वो ये भी नहीं बोला है डाइवर्सिफाई मत करो, राइट? At the same time, Raamdeo Agrawal, he has not told you to blindly do SIP. He said that in pockets there are good valued stocks, you keep investing. In the same way, Rajeev Thakkar भी वही बोला है कि आपका expectations थोड़ा कम रखो because the valuations are high. Okay, now forget about Shankar Sharma, forget about Raamdeo Agrawal, forget about Naren, forget about Rajeev Thakkar, and forget me also. I want you to answer 2 questions, only 2. Why did you start your SIPs? And what made you think of stopping it today? Did your goal change? Did your income change? Did your asset allocation change? Or did the market simply scare you? Comment below and don't just say stop or continue. Tell me why. Because that's where इंटेलिजेंट इन्वेस्टिंग बिगिंस. दिस इज शर्मा जी इनसाइट्स. सीखते रहो, इन्वेस्ट करते रहो, और सबसे इम्पोर्टेंट सोच समझ के इन्वेस्ट करो. थैंक यू फॉर वॉचिंग.